Hey everyone, welcome to Smart Investing. So thank you guys for joining me again for this second video. I apologize in advance for the last video. I know it was too long. I tried to make it 15-20 minutes. I made it to 25. But I was just really thorough uh, in going over those numbers just to really see if it was a good investment or not. So number two stock for the Q1 for 2023, the second stock that Wall Street likes is TRGP. Let me go over this real quick. The reason why Wall Street likes this stock is because a lot of analysts have rated it number one. Number two, obviously, it's rated as a buy. So 60% have said it's a buy, and 40% have rated this as a strong buy. So when we add those totals up, that equals 100, as you can see. So again, I'm not making this up. I'm showing you guys the numbers and as to why Wall Street likes this. So other than just looking at these analyst ratings, I don't really look at that. Again, you see my videos, I don't really look at that. I actually go over the evaluation and look at the company itself, see if it's a good investment or not. So please join me on checking out this video and seeing if it's a good stock or not. I'm going to run through the numbers and see, even if it's not a good stock, we want to see what this ticker symbol or what this stock can do for us strategy wise, or to see if it can be any use of us in any kind of strategy. With that said, so looking at the first page, as I like to see, we have here high volume. Price is at $74.92. The stock market is closed. So again, even though it's 11:37, right here it is 11:37 p.m. I should be in bed right now, but I'm doing this for you guys. So market cap is at close to 17 billion. Not exactly a small company, but not exactly also a large company as well. So with the price ranges that we have price ranges. Look at that. Exactly $30. So 52-week high is 81.50. 52-week low is at 51.50. So that's a nice range for the year. That's actually pretty good. Not too low and not too crazily high. So $30 gain for the year. If I was to divide that by 12, I don't even know the math in my head. Let's just guesstimate 4. So 4, 8, 12, 16, 20, 24. No, so let's go down to 3. So $3 a month. So 3, 6, 9, 12, 15, 18. So between, I dropped my pen. Sorry about that. So between 250, I'd say $2.50 for each month, which ain't bad. That's pretty average. And again, depending on the company, if it's good or not. So PE ratios at 72, earnings per share is at 1. It shows that they're profitable, but I'm concerned about the dividend. It looks like they're paying more dividend than their earnings. I would like to see this company grow a little bit faster than it's paying out, if that makes any sense. Again, if they're paying $1.03 for earnings, how is it that they're paying $1.40 for the year for the dividend? So it looks like, again, the dividend is higher than the earnings. So how is that even possible? We're just going to look at it and see what's going on, see if this is sustainable or not. So we have here, again, a fast growing company at 72.3 with a PE. So looking at the chart, I want to look at the chart first. So we have a 5-year chart. It was flat from 2018 to 19, then it dropped in 2020. All of a sudden, in 2021, like so many of the companies, like I said, they grew. And then all of a sudden, they had a sharp decline in 2022 of July. Then you see this bouncing around. So let's zoom in for the year, last year, 2022, because it's been a wild ride overall. You see a gain of the first 3 months, then you can see around this period here. So we're looking at around here, around that range there. So between that range for those 3 months, that's about from $67 all the way to like 79. So we're looking at about, to be safe, a $12 range. Then you see this big drop in June, really big drop. And then it starts to drop again. A little bouncing around here for July. And then it started to kind of form that bottom. Kind of juiced up again from late July all the way to September. Then it just kind of dropped down hard. So what I'm noticing, not one hard drop. Actually, we had actually 2 hard drops. This could have been a really big drop too, right here in May, but it kind of recovered just because of right here. Just because of this little, if it wasn't for that little uptrend, I think this uptrend wouldn't have happened just because of this. And then if this did not happen, this is just my opinion, if that little trend did not happen in around May, because May is typically a month for selling. If that did not happen, I think best case scenario, it would have tried to curl up, but I think it would have stood flat, and then I think it would have dropped. But to be honest, I think it made it worse for it to go up that fast and then drop, because the drop was even harder. Just because if you guys I want you guys to see this before I explain it. Like I said, if in May here in 2022, if it would have stood flat, it would have been better if it stood flat, because the drop would have been from here all the way down, and it would have been less of a drop. It doesn't look that dangerous. But since you have this uptrend here, now instead of it being flat right here, you have this drop going up, and now it's like all the way down like that. So now with this line here, so you have this big line here, it makes the drop even longer. Doesn't make it look like this, it makes it look like this. So that's almost twice the size of the drop. So I don't know if with that drop alone, if I know the year's over, but with that drop alone, that says a lot. And then you have this other drop too. It's like it curls up just so it could drop again. So then we have this little curl up. This was just a small drop, but what I'm trying to say is a drop like this, if you were in this stock, and then let's say you invested for 2022 or even in 2020, it's not easy to get over this drop is what I'm saying. That's not a easy fall to get over it. I mean that does lasting damage for most people. And again, I'm not even invested in the stock, but just seeing that drop, um, it's just a powerful drop. And now again, you don't see you see these small uptrends. It's like fighting its way to go up, then it drops down again. Fights its way a little bit, little bit to go back up. That's what I'm seeing. I see this here, I see it here, and I see it here. And what I think that pattern is, it might just drop again. So again, you have this big drop here, and then you have that other drop there. So it almost looks like a very short-term play, and then jumping back in. Uh, this is a stock to like swing trade. You jump in a few months, and then you get out. So again, I'm really concerned on the long term, fundamentally, not short term. For short term, yeah, I can see it's nice for trading and momentum. But then also, I'm worried about the earnings to cover the dividend. So other than that, I want to look at some order flow. So we have here the large order flow, which is pretty nice. It's uh, more than its outflow. So it looks like more people are buying this stock than selling it, which is good. But for this past week, uh, we have here slightly more selling than buying for this week. So definitely, if this is only showing me the last 5 days, this has to be more than the last 5 days. Again, I don't know the time frame on this order flow, but from what I'm seeing here, it's definitely uh, more than 5 days. It might be even for 2 weeks, which would be, the 10 business days. So who knows? So anyhow, I don't know if people covering their shorts or not. But anyhow, moving on to, aside from all that, I'm going to look at the quants. Now, for the income, I'm going to say no because it's kind of tricky. For momentum, I do agree this is a momentum stock. Again, I do agree with that. Overall rating, again, I just jumped into this company, looking at the numbers, they seem okay. Overall, again, depending on the stock, it might be good for one strategy over the other. As a growth stock, I guess I can see this okay as a growth stock. Again, I'm concerned about the dividend payment, and then we want to see the fundamentals before we actually agree with the number for the quality. So for earnings, real quick, I just want to see. Next earnings are in basically late February. So from February 22nd all the way to the 27th, that's basically that very last week of February. That's when they report. And then that is when we have the numbers for their earnings estimates. Now, again, I've been saying I'm concerned about not only the earnings, but I'm concerned about the earnings, number one, the dividend payment, and then on top of that, it's hard for me to decide if volume will get lower because if they miss earnings, that's only going to do more damage. Whatever. If the price goes down, even if they miss earnings and the price goes up, that'll be weird. But let's say they uh, go above their target, they meet their target, and they blow it out, and the price goes down. Um, that's gonna be a tough pill to swallow. Again, like I said, you have these small uptrends trying to fight up, and then it goes down. So if that occurs, I think the technicals are gonna matter more than the fundamentals. It just depends what happens. And then if the price goes up, then people are gonna like it more fundamentally. Um, that's really the play. Is it more for technicals or is it more for fundamentals? That's my analysis on it. Uh, I think that's what's gonna happen for sure. I'm pretty certain about that. And we just have to see it play out. Um, it's just a tough decision to see that. You know, some people don't see that because they just favor one side more than the other. Oh, I rather do fundamentals. Oh, I rather do technicals. But since I like to do both and I'm really good at both, uh, it's just easier for me to see it that way, I guess. So with the numbers, now we're gonna look into. It's not showing me the numbers. Let me get out the app and then go jump right into it again. So TRGP. Now we're gonna look at the numbers. So again, the earnings estimates are going up. I don't know why they're going up. I don't know. Everybody's positive and so happy and jolly. Santa Claus rally, like as things are gonna continue to normal when things are still just as bad. And again, I think we're still in a recession, even though some people forget that. Hey, um, people live in different worlds, I guess. So with the ROA, it was positive. Those are very low numbers. I want to see what kind of business they're in. So earnings per share actually went negative the last 5 years, as we can see. That's not good. So net margins, really no numbers, awful numbers even during 2020. Again, this is not a very small company. It's a medium-sized company. Debt slightly went up, but overall, comparing to uh, other companies, it's hard to say. And then against their peers, I want to see what this company does. The net income again, it's at 422 million, and then the revenue is at close to 17 billion. So not even a billion on their balance for their income. When I see some cash flow, 2.3 billion and then 1.91 billion. So it looks like 9.5. So definitely positive. So we can say at least 300 million in cash flow plus their net income. What is their net income? So we're looking at least 720 million in cash sitting on the sidelines. But again, I'm still concerned about their earnings trying to cover their dividend and see how they're going to play that out. So, want to see if they're giving out raises. So, that is a big raise. So, they went from, that's definitely concerning. So, they went from 2021 giving out 10 cents all the way to 35 cents. So, that is actually a 25-cent raise for each quarter. So, that's actually a dollar raise. That is significantly high. I think 25 cents is a bit drastic. I think maybe 5 cents would have been doable. At most, I think even 10 cents might have been even dangerous. It would have been doable, but sort of dangerous. Depending on how well they can grow. Even if they met in the middle between 5 cents and 10 cents, that would have been more ballpark. But 25 cents, um, it's pretty high. It's rare for companies to give out that much. So I just want to see something. Let's see their profile. So they are in the oil and gas transportation. So a little bit about this company. They are a production company. It says they have a diverse portfolio of domestic midstream infrastructure assets. So they gather, process, and transport. So they process natural gas into gas liquids. So basically, they take gas and turn it into a liquid, and then pretty much transport and sell it and all that stuff. And then they charge us at the pump for a little bit more. So, uh, it is a good business to get into. Again, very volatile business. But I don't see that much volatility overall, to be honest. The reason I say that is because these moves are very small in the uptrend. I would expect moves like that, bigger moves like that. So it's a way it's kind of odd for me to see that, especially for oil stocks. Oil stocks are just insanely volatile. All these rapid move changes, these price changes. Sorry, and those price action moves. Um, so overall, to add to this watch list, uh, I think this stock is good for a growth stock. To add to the watch list, I'd be very careful to add this to a portfolio for income. I wouldn't add it for a portfolio for income. To day trade, a little too expensive. It's not bad to swing trade, meaning jump in a little bit. I don't. I know how to swing trade. I don't prefer it. I rather either day trade or long term. Um, just to jump in a few months and cash out. Uh, Especially in a sector like this, it's very very tricky. Uh, I just don't like that risk, especially in this kind of market. Maybe a few days would be nice, but a few months, that I don't know. I haven't tried that. That's something I would have to look into to hold on to oil stocks for a few months and then uh, jump out. But anyways, overall, I think the company made a bad move giving those high dividends. It should have been lower. I think they really ruined the company with that, especially in this environment. I know that they're, probably getting more income because the inflation went up this year or whatever. Well, not this year, last year, sorry, for the oil stocks. But I don't see it happening um like pretty fast. Uh, it takes time to adjust the prices, even at the pump, and just it's all a process pretty much. Things just don't change overnight. So again, my take on it overall to add to watch list, I'm gonna say no. I wouldn't add this stock to a watch list. Uh, Not even for the income portfolio. It's just nice to look at it, maybe for day trade and swing trade, but overall, I'm gonna say no. I'd be careful with this stock. So that's my take on it. Thank you guys for watching. Again, I went over my limit. Apologize, but I just want to go over this stock thoroughly, and it just takes time for me to do that. So thank you guys for watching, and I'll see you guys in the next one.